Yo. All right. So, um, I want to do my weekly weekly review and weekly bias for upcoming week. Um, so basically, let's first go over last week. Last week, I journaled it. Last week was NFP week. And I got a nice Notion journal now. So we had NFP week. Had a small, like almost a break-even day at Monday. On Tuesday, had a pretty big loss. Didn't journal this day. Didn't journal these 2 days. But I did journal these last 3 days, even though there were no trades here. I did journal these last 2, and then I'm gonna be journaling it like these 2 days. So don't know really why this loss was that big. Probably I think it was like over trading or something, like something stupid. This is Thursday. Got like a nice win off that, and then on Friday I just lost it all basically, and now it's a loss week actually. But it's nice to see here that I actually was up the week 600 and I lost 400 because of a stupid mistake and just over trading, and you will see in the results inside of here. So the win here, took 3 trades, P&L 600, outcome win, price action was alright. Risk on the first trade 0.30%, second trade of 0.1%. I was trading one contract. It was live, by the way, and then third trade was also 0.30%. So like really small trades actually, but I don't know how I got 600 out of that, but we'll see. And then what kill zone, didn't journal that yet, but should be in the next one. It should be there. So 1.1.5 R, 1.1 R, and 1.1.6 R. Time frame entry 1 minute. High impact news folder NFP, and this doesn't matter. Why did I take this trade? I took this trade because we enforced the volume imbalance. So here, if I can remember, I took it on ES. So I was actually already looking at this bearish price action. I was actually already bearish. We inversed this and then just a small scalp. Oops. Splitters for the pre-market were huge, run up, leaving a big 30-minute busy. What I want to see was we to tap into the busy around equilibrium, then go higher to the buy side. Equal highs on NQ. I recognize we were in beautiful market maker buy model, and they were in a stage of accumulation. And sell side of the curve, I remember this curve. So by that, I knew that you wanted to leave external liquidity, go lower. Oh yeah, so here this was like a market maker buy model, and that we're in the sell side of the curve, the market maker buy model. So this is external range, or yeah, here this is external range, and then you wanted to go for, we leave external there, and then we go for internal, and you'll see that on the other trades as well. Recognize the market rate sells out of curve, so recognize that where we were in time. I've learned that way you can recognize where you are in the chart. That becomes easy and become confident in your trades. So it's actually, I took all these trades inside of the sell side of the curve because I was that confident with it, and these were all wins. So second trade also, this was an NQ. So NQ was actually the same, like again this trade recognizing created by mine, we were sell side of the curve. So here we're in sell side of the curve, accumulation 1, accumulation 2, external range. We generate buy side liquidity. We sweep internal, go lower. We fully close this in, then leave it. So this becomes a change in state of delivery. So this becomes an order block. And then I entered on that and then targeted lower. And then the last trade was the same. So I don't know how I can, yeah. So last trade, I took this again, because again, 3 times in a row, I was recognizing a market maker sell side of the curve. I've learned that once you recognize a market maker X model, they can give you a lot of confidence in your trades and bias. So here again, another beautiful example. External range, internal range, sweep internal range there, leave external, generate buy side, go short, and then we already tapped into equilibrium, and I still wanted to go lower in equilibrium because there were equal lows and we were bullish. So I hope that explains it, but that's basically how it is. And then I was looking for a trade inside of into buy side of course, because that's where the best trades are going to be. But I didn't take this trade because this was outside of my kill zone. So I trade 9:30 to 11:10, and then that's like the 9:50 to or the 10:50 to 11:10 macro, and then I trade the 11:50 macro to 12:10 macro, and the time in between there I don't take any trades. I take like a break, small break, get something to drink, get some small break, and this was like 2 minutes outside of here, so there we got a 2-minute inversion here, and then the setup formed this candle, or the inversion formed at 11:12, so that was past my kill zone, so I didn't enter on it. So maybe I gotta adjust that, but for now it works really well. So I missed out on that. That's totally fine. Can happen. Yeah, that was that day. Then this loss, which was so stupid. I actually got this new desk in my room, and I was working on that all day, and I was looking at the market on the side. I had my iPad on my bed and on my old desk, and I was watching the markets and saw a few setups which I didn't take. I didn't care about them, but once I finished building the new desk, I went on the charts again, and then I just traded. I wanted to trade like I could just trade. I didn't look at the timer even. I just jumped into the charts. That was so fuck stupid. So I was like done at like New York time. It would be like 14:30. So I took one setup inside of the kill zone, which is still my kill zone. I trade AM session, and the PM session kill zone for me is 13 or 1 p.m. to 3 p.m. And then because 2 to 3 p.m. that's the New York PM kill zone. And then after 3 I don't trade, but I took a small loss at 14:30 to 15, so that's 2:30 p.m. to 3 p.m. And that was a loss. I took a loss there, and that was a totally fine loss to take, but I traded after my kill zone. I traded after 15, and that's where it all went wrong, and you could just see that, and that was so stupid. I wasn't even looking at the time outside of kill zone, with kill zone outside. Trade counter 3, P&L minus 413, outcome loss, price action was alright. Risk on the first one, 0.30%, and you could just already see that I took a loss there. I was totally fine with taking that loss, but I just upscaled my loss, which I wasn't even confident with. And I upscaled my loss when it was outside of my trading hours, so that's like so stupid. And again, took the loss there, and then again, took the same amount of risk there, even though it's half size. That's something I do gonna admit that was alright. It wasn't that bad because my normal risk is on these accounts, on the 100k accounts, because I'm practicing for a funded account, which is the target is 6%. So I'll be risking on a good trade 0.5%, and then on a alright setup, decent setup, I'll be risking 0.25%. So yeah, that's like the same as I would be risking on a funded account, but I should be risking less. But it wasn't 0.5%. That's what I mean by that. But still, it's bad. So yeah, I took 3 trades. Time zone New York, with kill zone 14 to 15, and outside of kill zone. RR 0 because I lost. Time from entry 3 and 1, and then I think the first trade is gonna be like 3 minutes, and then 2 after that on the 1 minute. High impact news for NFP. Sorry, this doesn't matter. But here, why I take this trade? This is just me putting up my emotion, but it won't end with this here. But I took this trade because I was actually bullish. I want to see lower, but I don't see. I would want to catch the home run. Just stupid of me. So why do I think that, man? But yeah, overall that trade wasn't bad. We delivered off our singular 8-minute SIBI and wrecked it lower. I wanted to see more confirmation, so I waited on the 3-minute inversion as well. We got that and went a tiny bit lower. I saw that we had a 1-minute bigger SIBI, and there were 3 high resting there. I already knew they. Yeah. So here, this was the 8-minute SIBI. You got a nice reaction there, lower. Then I took the inversion of this 3-minute inversion for a gap. That's this bigger one. So I took the closure below there, entered earlier, but entered on the closure below there, and then my stop was at that high. But I saw that that high was like in this nice city here, and that we had a lot of room there. So I was actually already thinking in my head that this could be like a turtle soup here. So I was totally fine with taking loss there, because I would just enter the trade again. There, it's still inside of that kill zone. So got stopped out here on that turtle soup, and then we got a nice run lower. And then where I entered off here, so I took a loss here once I got stopped out here. So let's go to the next trade. So I was totally fine with taking this loss, and I was waiting for the next trade to plan out. So yeah, and I was starting sell side there, or equal lows. These were equal lows. Oh, not now. This was just sell side. These this low made it equal lows, but it's just sell side. So we got that turtle soup, and I was just waiting after turtle soup, because I was already confident that this was going to be turtle soup. I was just waiting for a change in safe delivery, which is going to be the last upload candle closure below there. So this is a down close candle, it's a bearish candle, and this is a bullish candle. So once we get a closure below the bullish candle, that's my change in safe delivery, and then I'm entering a market order on there. And they also got an inversion there. It's a tiny pissy there. We also inverse that. That's just added confluence. Doesn't have to be, but that's just added confluence. I entered on a market order there, and my stop is above the order block here. That's mean threshold. We tap it there. That's just the damage of the wick there. Look where the body closed, like went all the way up there, body closed all the way there. So my stop was safe above the order block there. I reacted lower, and then my full TP was there. I scaled some profits off here. It took I think I was in like 6 contracts. I don't even know. I think I was in, yeah, this was 0.25% risk, so I was in like 6 contracts, I think. And I took like 2 off, I think, here, 2 here, and then 1 more there, because the price action was just too slow for me. So I took 3 off, basically 50% off, and I want to see 50% to my actual target, like full TP to this target. Look where we got the reaction. This was the low of the we didn't go any lower after this. The whole day market just closed somewhere above there, and we never got this low. So I actually was pretty pissed that I put my stop at break even after we hit this low. So I was at break even here. So I saw that we reacted off this here, and I got stopped at break even. So I was still confident with this low getting hit, and I was actually pretty pissed that I didn't get the TP there, which is so stupid. But yeah, didn't got the TP there, got stopped at break even, and it was like such a small win, and just was mad because of that. The revenge trade, you know when it's good setup. Yeah, I do know when it's good setup. It's just revenge trading. Why does it never works? It never works. It really never works, and I'm always lucky actually that it never works for me, and I still do it. Like, it never works for me, and I still do it. But I'm lucky that it doesn't work for me, because if it does work for me, then it would be so harder for me probably to to actually accept that. But it never works. This shows again minus 350 again and again. It showed me, and why it's still, and why do I still? It doesn't work. Please, God help. Like, please, yeah. I just yeah. So I got stopped at break even there. We got big displacement. I entered on market order there, and look, I could have just if I bought instead of sold on that push down, then I got a way better. Then I thought it would be in profit. It's like so stupid. But I got stopped at break even. I don't even know where I enter off this. This is already balanced price range, so we shouldn't come back here. And this just, what are we doing here? Like, there's no reason for us to come back here to here. There's no reason. So we went lower, we inversed this, but that doesn't matter, because there's no reason for us to go lower after this, because there's nothing to react here. We can't react off here. We need to react here because there's something there. But still, it's also the end of market, and it just generates sell side liquidity for later, for next week. And I was just pissed there. But yeah, I got a huge loss after that. It was like a bigger loss, I think it was, because No, it's just a 0.25% loss. One of the bigger loss than it was, but it was so stupid. So end of the week results minus $82, and it's actually not that bad because it's an NFP week. Could have been way worse on NFP. So minus 82, that's basically break even. So I'm actually fine with taking that. And now for upcoming week, let's do our bias for upcoming week. So let's fill this in. So I have these templates here. So for a win or loss, I'll put this in. But this is basically the end of the week. I finished that, and that's like the end of the week results, and this is like a new week, so you can already see the emoji. And this is a break even. So I press this, I don't need to do anything, and then no trades there. Break even, as I break even, I mean no trades there. So I used to use new. Date doesn't matter. I don't do any of this because this is where it's for a actual trade. And then IMPEX news folder, that's for also the day, and then Sunday to Saturday. So I gotta fill this in. So it's a weekly forecast. We're doing that now. And heavy news. Do we have heavy news this week? I already have it here. So it's this week. Let's go to next week. So this is next week. CPI, but that's GBP. Unemployment claims, treasury, currency report. That's not that big, but I don't see that often. But isn't that it isn't that big, twice per year. The event will be listed as tentative until the report is issued. No, not that big, but just I don't see it often. It's twice a year, so that's why. So yeah, we don't have any high impact news. So I mean by that, is Powell speaking this week? Do we have CPI this week, FOMC this week, or NFP this week? So that's the biggest news week. I actually gotta add in here. Or no, I don't need to do that. Do I? No, I don't need to do that. So end of the week P now, that doesn't matter. So weekly forecast. So I could put it in here. It's like templates, and I could just remove this for a new one on TradingView. But I'll just do my weekly forecast in this video. So that's also alright. But I do journal it when I actually take trades. I do that, but let's do our weekly analysis. So let's go to TradingView. Let's add a new tab and let's get DXY there. Alright, so crude oil got that nice reaction of constant encroachment. I'm actually expecting it to go way lower from now on, actually. If we inverse this, then I'll probably take the trade, stop above there. Let's go to Nasdaq and ES there. Alright, so I'll remove this, IPTA 20. Oh yeah, all those annotations are gone. That's annoying. Alright, so I did a lot of annotations on there, but it's actually gone. So actually, so I was actually looking at this as all-time highs here. Let's mark it out so I could just explain it better. So all-time highs here. Right, middle, top. Black, please. Yeah. Alright. Alright, so we do have all-time highs here, and we're in a new quarter. We're in a new month. So, and I am expecting bearish prices, so I'm looking at this as IPTA. So what I do is I go to the 1st of April, because I go to the 1st of the month, and from there I look at IPTA. So what I do is hold shift, and then I click once, and then I drag it back, and I look at the bars there. So IPTA, how IPTA works is you go to the 20-day look back, the 40-day look back, and the 60-day look back, and that's where the algorithm's gonna refer back to. So it's gonna refer back to last 20 bars. Don't look at the days because you don't count the these Sundays, and then TradingView does count these Sundays, or I think it was the Sundays, but you look back at 20 bars. So 20 bars here. You look at the low here, because I'm expecting bearish price. It doesn't work. Like, you have to fit it with something. Like, you can't just say, oh, it looks like we're bearish, so I look at IPTA, and we're at a new month, so I look at IPTA, look at the past 20 days. It doesn't work like that. You gotta already have a narrative, already have a bias, and then use IPTA. So what I do, I use IPTA here. So 20-day look back, I look at all from here, from this first month open, so first day of the month, so 1 of April, I look back 20 bars, and from there I look at the low. So right here, this is the low of the IPTA 20. So mark that out here as IPTA. Mark it out as 20, IPTA 20, that's there. I have an alert on there as well. And then it's also, these are also equal lows there, because we have a low there, and then a low there is a swing low on NQ, but isn't on ES, but still looks like equal lows. And then also I look back 40 days, so I will shift, I go back 40 bars, I look at the low there. This barely doesn't, it doesn't fit that low there, because as you can see, this is the first. I don't just go, oh, it's the 41 here, so I'll take this one. I'll actually take this low here, even though I'm expecting that, but still. I'm marking out this out as equal lows here. I'll just mark this out as IPTA 40 here. So that's my IPTA 40. Then I look back 60 days, because why do I look back 60 days? You'll see. So 60 here, so 60 days, there's that low. And then why I look back 60 days, it doesn't always work like all the days, doesn't work always all the days. Sometimes it picks the 20-day, and then you go higher if we're really bullish, really bearish. But now I'm actually expecting bearish prices. Also explain that with DXY. So 60 days, that's here. And why do I pick that low as well? Because if you can see, that low is there on ES, and then that low is also there on ES, and then on QS as well. So basically those are like relative equal lows, like they're like apart a lot from each other, yes, but there's liquidity beneath there. We never rated this low on this here, and then same didn't on this here, and then also these are like almost equal lows on ES. So I'll mark this out as IPTA 60, but I'm also remembering this low, and that we probably would go there as well. So IPTA there, and then IPTA 60. So now I've marked out my IPTA. And then that's actually where I'm expecting us to go. First here, then there, these here. So these are relative equal lows, so that's actually where I'm expecting us to go. So we have that there. We also start all-time highs here. That's this high here on ES. Where is it? Here. So there, that's the all-time highs on NQ here on this day. But here is the all-time highs on ES. So that would be this high and this high. As you can see, we have an SMT there. So we never took that on NQ. But we did take that on ES. So we already took the liquidity on NQ, so, or on ES, so NQ doesn't have to take those. So it means that NQ is more bearish than ES. So if I would be taking shorts on a bigger time frame, so I would be targeting these lows, then I would be taking it on NQ, because NQ is already lower. NQ, ES won't catch, they move in tandem. ES won't just go way faster than NQ. That doesn't work like that. So you take the trades on NQ because NQ is already lower. It makes sense, right? It's closer to the target, so why won't you take it on NQ? If NQ takes the target, then you're too late on ES. We could reverse off that level and go higher. Like, you take it off NQ. That's, I think that's a logical way. So so we have an SMT there. So what I do as well is I'm already having a narrative that I want to see bearish prices. So this just fits my bearish narrative. So what I use is, I use from the manipulation leg, I use a standard deviation. So you have a standard deviation from here. -2, -2.5 comes below this IPTA 20 here. And -3.5, -4, that comes in line with like these lows in IPTA 40. And then also I also have, because there is a breaker here. So we have a A, B, C. I'm anticipating D. So this is A to B like breaker. See what we have there. -2, -2.5 comes in line with the IPTA 60. So it does look pretty good. -1 comes like below that, below those equal lows. So that looks good. I'll just leave it on here because this one, it just looks better. I'm targeting -2, -2.5, and this looks good here. I have these stars marked out so I won't forget them, but this just in the way, I would say. It's like in the way I'll be taking trades there, and this is just annoying. That's like the reason. So I'll remove that. And then I'll also look at ES because I'm actually expecting lower prices, but on NQ, but also lower prices on ES, of course. So I look at ES, A to B leg standard deviation. They're almost the same because this high wasn't really that higher than that high, but still. A to B leg standard deviation, let's see. Also IPTA here. So let's mark out those real quick. So 20 bars, those lows there. So didn't get that low there, but it's my IPTA 20. I'll mark it out as equal lows, just equal lows there. You could mark it out as IPTA. I really don't care if what works for you, of course. Doesn't matter. I wouldn't say to you like don't do that. Like it's the same. It's really the same. So April 1, 40. So it is IPTA 40 here again. Misses it by 1 day. Don't care. If you don't care, I won't care. Like it's the same. So IPTA here. And then IPTA 60. Like this is perfect on ES. So like all those equal lows there. It's the same on NQ, of course, but on ES it looks really clean. But yeah, we gotta remind NQ is lower, so NQ is probably gonna give the better price action. So IPTA 20, IPTA 40, IPTA 60. All right. So A to B leg standard deviation comes in line with the IPTA 20, -2, -2.5, -3, -4 doesn't really come in line with anything. B to C leg standard deviation -2. Look at that. Look at that -2 standard deviation. I'll leave this on here because that looks really clean. I'll lock it. -2 standard deviation comes in line there. -1 standard deviation. That's where we close the week. Like you can't beat precision. It's like so good. It looks so good here. Like -1 standard deviation. Like you can't beat precision. All there as well. So that's what I'm expecting. Like look how we're close to there on NQ. Like what are the chances that we take out those lows there? But yeah, have that marked out. And yeah, that's just all what I have to mark out really. Let's zoom in deeper. Let's look. I'm actually still bullish here because we had a nice run up here. There's also devil's mark here on the 4 hour there. Because this candle opened and we didn't get any manipulation. So what market wants to do is market wants to give manipulation to this. So yeah, that's how you explain it. So every candle has a wick, has an open, has a wick manipulation, and then goes lower or higher, like the open a low high close or the open high low close. Sorry, that's it. Fuck, I didn't get it. Mosquito. But yeah, I'm still expecting bullish prices actually as well because we had like equal highs here. I think it was. I don't even know where it was, but we could go as high as the constant encroachment here. I think it was the daily. Let's look at the weekly. Yeah, the daily is bigger. So I'm looking at it at the daily. So we do have a trajectory block here, and then we could sweep these highs and then go lower, and then have generate buy side liquidity. Could be. But that's all I'm marking out on NQ. That's all it is really. And then we already manipulated on ES, so I'm not expecting for us to go way higher. So then on NQ we would maybe go higher there. But yes, I'm really not expecting for us to go way higher. So I'm looking at this rejection block. There. Let's look at the biggest one, would be on the daily, yeah. Alright, so daily rejection block, and that's all I have marked out. So what I want to see is, I want to see reaction. Take that there, then go lower. Maybe take those there, leave generate buy side, then go lower. I really don't care, but I want to see bearish prices after that actually. And then that's all I have on the indices. And then let's see at DXY if we can confirm that. So DXY, we're actually in that market maker buy model. I did say that we're in like a beautiful market maker sell model, but I was wrong. Learned from that though, because yeah, I learned from that. But all we have now is, I did have this marked out as turtle soup. Yeah, I think we could turtle soup this here actually, because we took out that low there, but we didn't fully sweep it. No, we don't have to actually. So we did tap inside of that busy here. We did have equilibrium there. Don't know why actually. Yeah, let's do our analysis from like top down. So yeah, market maker buy model, rejection block confirms that we're still bullish. Nice placement to the upside. Biggest breaker on this is the weekly A to B leg standard deviation, -2, -2.5, comes in line with the buy side liquidity inside of a monthly SIBI, which also comes in line with like above the equalize there. BTC leg standard deviation basically comes perfectly in line, the same in line at the -2 there, like that's almost the same. So we have a breaker there, we get that lower off of equilibrium off of this range there, erected higher, we inversed these on the weekly, so we inversed that, big displacement up, took the buy side there, so we go from external, we go back to internal there, we go higher, but we failed to displace higher there. So if I look at this leg here, I look at this as a singular SIBI, so we have one, or like I look at it at the as a singular SIBI, or if we don't have a time frame, this where it shows a singular one. I look at the time frame where we have two SIBIs. Like I just go lower, I go to 2 SIBIs, 3 SIBIs, and that's like the max I'll go. So SIBI there, and then on the daily it's just a singular one. So I take the daily. So you have a SIBI there, but we failed to close below or above there. So what I'm thinking is that we still want to go lower, because we failed to close above there. We just filled this gap here probably. It's only 1 hour, but yeah, we failed to displace higher here. This wick shows me that we probably want to turtle soup this here. Because why would we turtle soup this here? Because we are already bullish. We did already tap inside of that busy, but we failed to displace through here. Like what could be, if you look at it, like what could be happening, where like these scenarios that could happen, like how can we see this not as a turtle soup? So if we react off here, if you see this as like a SIBI, and you think that, oh yeah, we're gonna go lower there, why would we turtle soup that? Why would we go lower? Alright, we do have lows there, but the bigger time frame buys, if you look at the weekly, then the weekly is showing you that we're bullish, right? We got this bullish breaker, we got that equilibrium tap there, we went higher there, we did sweep buy side there. We also in that PPR there, but we already wrecked off that PPR. Like where's that? Like there, that reaction there, where we tapped into there. When we tapped into that BPR, then went lower. We should have went for these lows when we tapped into BPR. So that was the same as I was thinking. Like react off the BPR, then we take out the lows, but we failed to take out the lows. So what does that mean? It means that we want to go higher. So if you look at this here, and we know that we want to go higher because this failed, and we won't go above here because this wouldn't be tapped again, because if smart money sold here, then smart money would have bought here, but they didn't. So the bias is still staying bullish, and that's like the only reason. That's really, and it's really that simple. So we failed to take out the low there, or went to these lows there. So we probably want to go higher. So we take out the buy side there, we move from external to internal. Okay, so we move to internal there on the weekly there, and we're expecting us to go higher, but we failed to go higher. Why did we fail to go higher? Well, let's look. There are like probably so many reasons for us why we failed there. So yeah, we do have that CB, but we should have gone through that CB. This should have been an inversion, yes. So this shouldn't be a reason why we got that wick. So there should be another reason. Let's look closer. Let's not look at this. Let's look at this here. Let's look at like this here. Like the top here. Oops. I was still calling with my girlfriend, which was asleep. But let's look at a wick there. Let's look at there. Like why the price went all the way there and then went all the way lower there. So if you look at the 1 hour, so the 1 hour went all the way there. Oh, yeah, there could be. This could be a reason. If you look at it like this, this could be a reason why price wanted to go all the way there, but it doesn't make sense to me. Like it's a daily SIBI, so why would he go on the 1 hour there and then react all the way lower? I think it's on the bigger time frame. So let's actually look. So they already take this higher, so this rejection block doesn't really matter anymore. We don't have anything there. There it is. And that's, in my eyes, that's the reason why we failed. Because daily volume balances, in my eyes, cause weird price action. And if you don't believe me, daily volume balance, only daily, it's only on the day. If you don't believe me, I'm actually gonna show you right now. I'm not just making this up. These are all my notes, it's full, but hopefully you can see it. One's there. Daily. Oh, where is it? I hope you can see it. Daily volume imbalances can cause some unexpected price action. And that's the reason to me, and that's why I wrote it down. I don't write anything stupid down. It really is a thing. And I saw this happen many times, and again, proves it here. Daily volume imbalance can cause unexpected price action. So we got that reaction there, but we thought we would inverse this, but the daily volume imbalance caused us to have weird price action. So if we react off that volume imbalance, we should have already inversed that as well. But again, you can look at this, like, we are bullish, right? So why weren't we getting bullish price action? Well, we probably want to go lower then. Where we want to go lower? Not here, because that would invalidate this story, like this narrative. So where would it go then? What people of previous week, like, if you can imagine this, like previous week, that's already over, but previous week people are still holding positions, and there's a whole weekend that went by, like a whole week and a weekend that went by, and a weekend that went by that the markets were closed and people were still holding their position. So what market's gonna do is market in the weekend, it's just gonna open then on Monday, and in a week we're gonna stop all those people of the previous week out, because they're still in profit. They are actually in profit still. So what we will do is we will go lower. We take out the liquidity there. Why there and not here? Well, if you take out the liquidity here, why would you go there and then react all the way higher? It doesn't fit the narrative. Like, where are the PD rates? Like, this is just liquidity, right? Why will we go to this liquidity? Why this random liquidity and then go higher? If we will go to this liquidity, then we'll also go to this liquidity. Like, this just random liquidity. Like, we will fit inside of the narrative that we're already having. So what the hell? So we're bullish inside of the weekly here. We went from external to internal. Internal reaction failed to go higher. So where will we go back to inside of this existing existing narrative. We'll go again to this low. We'll take out those orders there, and we are still bullish inside of this here. So what will we do? We'll react off here. We'll turtle soup this because there's the liquidity. We won't go lower because that would invalidate the bias. That would invalidate the narrative. So we'll turtle soup that and then go higher. Because why will we want to go higher? Because on the bigger time frame, we're actually in a market maker buy model. So PPR here, got that reaction lower, move to it. Yeah, I explained it. I already explained it. So, and why do we want to go here on the bigger time frame? Look at this. High there, high there, high there, high there. We swept those highs. We swept that high. So again, the losses that I took. Let's go back to, or the wins that I took. What did I learn? Or what did I already know? But once you can recognize a market maker X model, it can give you a lot of confidence in your trades and buys. Look at this. External range liquidity, internal range liquidity. We sweep external range liquidity. We go to external range liquidity, leave external range liquidity, then sweep external range liquidity, or go to external range liquidity. We didn't sweep it, but what is this? What is this if you zoom in here? What is this? External range liquidity, internal range liquidity. This is internal. You go back to this is internal and external, no big time frame. Go back to internal, sweep external, which is internal. So if you can see it like this is your liquidity, and this is your external. So external range liquidity, internal, external range liquidity, internal range. We sweep internal, you go to external, we leave external. Perfectly equal lows, equal highs there. Like we leave external. Why do we leave that there? Because people are then in profit. So later on, go to there and take them out. Like it's that simple. So we want to go to there, and I believe that it's gonna be after this turtle soup here, because again I explained it. So that's the bias for me. That's what I'm thinking. So this isn't a inversion yet. I think it's now gonna be Sibi, and I think now we want to go to the turtle soup here, to sell side here. So we react off that Sibi. We go to sell side here. We turtle soup it, then go higher. So if you look at this like a daily. Alright, so then also grab our economic calendar. Or is it? Oh, that's 2018. My bad. Oh, wait, what? Was I looking at this when I did my... hopefully I didn't. This week. Alright, yeah, so... Hold on. I think I did it right. Did I? 2013. Wait, what? I'm confused. Sorry. Next week. All right. No, I did do my analysis. All right. So, if you want to fit this narrative, wait, what? Oh no, I did do it wrong. Sorry, that was next week. All right. So. This week, this is the upcoming week. So on Wednesday we actually do have CPI. I actually do got. All right, sorry. So let's go first back really quick here. Weekly forecast, heavy news. So we do have CPI and we have FOMC. So it's pretty big week. All right, so we do have CPI. We have FOMC. So Monday, Tuesday gonna be manipulation, accumulation, because there's no news. So what we will probably do, we'll accumulate. We'll probably take out this low as well, and we'll accumulate. What we'll then do, we'll manipulate, we'll distribute, and then go higher. So Monday, Tuesday, going to be accumulation. Probably going to be manipulation on this time frame. So accumulation inside of here. Wednesday is going to be probably distribution because it's pretty big news. I don't think you want to have that big of a manipulation, because manipulation is going to be pretty small because it got to fit the weekly narrative. So that's why I think manipulation is going to be pretty small, and that it doesn't fit this day. So that's why I think this won't be the manipulation. So I think this will already be the manipulation. Like I think that's pretty easy explained. and then Wednesday will be the distribution, and then this is going to be Wednesday, and then Thursday and Friday are just gonna follow probably, because we have PPI, employment claims. Pretty big news today, actually. A lot of news, actually. But that's Euro, is USD, yeah, USD. So I think Thursday and Friday actually gonna follow. So if we look at this, then Monday, Tuesday gonna be manipulation. Then we have like a Tuesday reversal, Wednesday reversal, gonna be either one of those 2 days. Wednesday is gonna be distribution, Thursday is gonna be distribution. So the week is gonna look like this. So we open, we go lower. So this is like Monday and Tuesday. This is Tuesday. This is Wednesday. And then like this. Alright, so gonna mark out like this. Alright, so let's look at it like this. So this is Monday, Tuesday. This is Tuesday / Wednesday. This is Wednesday / Thursday / Friday. And then this is Friday and then close. So this is what a weekly candle will look like. Oops, this is what a weekly candle will look like. It's still the same. Alright, so there. Actually, bullish candle is actually no. There. That's better. There. 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 Big bullish candle. Big bullish candle on the weekly. That's what I think is gonna happen. So yeah, if you look at it like that, then that would mean that we would go lower. So we would go a bit higher on the indices, on NQ and ES. We would go a bit higher because that would be the manipulation. And then after that, we would have a big drop in price because we have a big pump in dollar. So would this also fit the narrative on the indices? Well, let's look. So what did I say here? I have I expect the dollar to pump up and I expect the indices to go down. So that's why I marked that out. And it also fits everything there. I'll mark it or the after hours open, but so yeah, what I had marked out, devil's mark, that's why I had marked out. So I think we want to go manipulate there on Monday and Tuesday, and then that we could manipulate there, but actually what I'm thinking is we want to go there, I want to go a bit higher, constant encroachment, leave external range liquidity, so we'll have like price go higher, rect off constant encroachment, then go lower, lower, lower. So lower, 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 lower. I don't know how big it will go, but it does look like this. So we'll go higher. So how would this look like? Weekly candle just opened. So here, let's look at the weekly candle. Actually did it? Yeah, it did. Alright. So this is the weekly candle, right? So the opening price is right here. Oh, right here. This is where the weekly candle opens. So we open here. We'll go to constant encroachment there. We'll go way lower. I don't know how big we'll go. That's something I don't know. I think like up to 40, up to 20, up to 40. Up to 20 is too close. I think up to 40, something like that. And then we leave that external there. Or we sweep this as well, and then we leave 60 day. But up to 40, that's somewhere where I'm thinking. So somewhere there. Then we go back inside of the range, and we'll close the week there. So we open the candle here. Right, we open the candle there. We manipulate higher here. There. There. We'll go way lower there. The candle just goes back a bit. Sorry. Has to look good, right? Then the candle goes way back here. And then this would be a big wick. Or like a small wick. It could be a small wick because I'm expecting us to go lower after that as well. And this is how it will look like. Like, isn't that the same? Is that like Oh, and this is gonna be a gray candle because my bearish candles are gray. Isn't that just the complete opposite of what I said on DXY? And isn't that what it exactly it has to be? So that's how my thought process is behind all of this, and that is how my bias is going to be for the upcoming week. So that's my daily, or that's my weekly weekly bias. So yeah, that's all. I'll go live. Hopefully people will follow my journey and we'll see it. I actually love doing this. I don't care if people watch it or not, because I'll just do it anyway. But I love to do this, and then maybe I can just talk with other traders, and then people that are like the same level as me or higher. Of course, that would be better. But also, if they're lower, it would be just awesome to connect with other traders. But yeah, I love doing this. So I really love doing this. But yeah, I'll see you in upcoming week. And that was my weekly review and my weekly forecast. So yeah, I'll see you.